Hey there, Mauricio coming to you guys live, and today's session we're going to be talking about risk management. Okay, what is the proper risk management that we should be using on trades? Okay, so right now I want to go over the ratios. Then we're going to be going over proper risk management, which is what lot size we're going to be looking for specific trades and so on. But right now I want to go more in detail with ratios. Okay, what is the proper ratio that we should be doing for our trades? Okay, so there's a 1-to-1, 2-to-1, 3-to-1, and so on. There's a lot of ratios, but due to the fact that we're looking into the trades, we will be able to find more 2-to-1s than any other type of ratio in the market. Okay, so by this all means, I'm just gonna do a little quick draw out and show you guys a little bit of what this looks like. Okay, so let's say we're on the uptrend and we can identify we have everything in common, everything we need, which is like the Fibonacci retracement, we have the price action, we have this 38.2 really good area that was respected, and then after that we have our price action. Now, what is the last but most important thing to do when you are trading? You want to know how much you're risking. Okay, that's right. You want to know how much you're risking first before you want to know how much you're gaining. Okay, first error from people that start trading, they want to know how much they're gaining. Okay, that's the wrong way to think when you're trading. The correct way to think when you're trading is that how much am I risking? How much money am I willing to lose? So then I can start creating my own ratio on how much money I can start to win. Okay, so first thing you gotta do, you gotta identify what are gonna be your losses first before anything else. Okay, so let's say we're seeing this trade, we're seeing a good retracement, 38.2. We have some structure laid out. We have an uptrend structure. We have a trend line and everything. We have everything that we're waiting for just for us to take action and actually put a trade into it. Now, before we put a trade in, we kind of want to know what exactly the direction of this market is going to be. Where's going to be our stop loss? Our stop loss is usually going to be, like mentioned on previous videos, it's going to be about 15 to 20 pips underneath structure itself. Okay, so we're going to look for about 15 to 20 pips on structure itself. It also depends on what pair you're trading. So like if you're trading UJ, which is USD JPY, we're looking for 15 to 20 pips. You're trading bigger, more volatile pairs like GBPs. We're actually doing like 30 pip or 25 pip stop loss and so on. Due to the fact that it's more volatile in the market. Okay, so right here we're gonna go more in detail. In this area we have our tools. So what I'm gonna go click right here, right, and this is the long position. So I'm gonna grab this one area where it says long, and I'm just gonna place it right here where I'm gonna be entering. Okay, so you clearly can see it says 32 to 32. Okay, so that's a 1-to-1 ratio. It immediately gave me a 1-to-1 ratio. This right here would be a 1-to-1 ratio. Now, is a 1-to-1 ratio good? Yes. A 1-to-1 ratio is okay. Okay, I'm not saying it's really good, but it's okay trade. It's decent. It's cute. You're not gonna lose a lot of money, but you're also not gonna gain a lot of money. Okay, so this is something you gotta take in consideration. Is your trade really worth waiting a 1-to-1 ratio? Now, I prefer 2-to-1s and 3-to-1s and so on. But if I do see the opportunity for a 1-to-1, I will take it due to the fact that it's there. We have everything that's telling us that it's going to keep on going up and so on. So we have a lot of confluencies that are indicating us that the market's going to keep on going up. Okay, so this right here is a 1-to-1 ratio, which is 32 pip stop loss and a 32 pip take profit. Okay, so we're risking the same amount that we're gaining. Now let's go a little bit more over here and let's talk about this 2-to-1 ratio. Okay, so we're actually seeing the same topic. We're seeing the market come down, do his retracement, come back down to like this 38.2 Fibonacci level, and when it comes back down to that 38.2 Fibonacci level, we're seeing uptrend. Okay, so same thing. I'm gonna put my Fibonacci from up to down. We're gonna be looking for this 38.2 Fibonacci level. We clearly see that the 38.2 Fibonacci level is being respected on this area as structure. Okay, so this right here is being respected as structure in this area. Once we see a good respect of structure in this area, we're going to take that in consideration alongside with all our other confluencies, which is price action on M30 time frame and so on. So right here we do see price action. We see exactly the same setup that we had on the previous trade, but right here we can actually see that our long position is going to be a lot better. Our stop loss is going to be a lot less. So let's say this stop loss is going to be 15 pip stop loss, and our take profit, we're not going for 20, but we're going for 30 pips. Okay, so this right here would be a 2-to-1 ratio. Now 2-to-1 ratio is great. It's awesome. I love these because you're gonna be looking for these at the market a lot. You'll be seeing these 2-to-1 ratios a lot in the market. So due to the fact that you're looking for these in the market, you're gonna be able to take advantage of them. I usually see these at least two or three times a day, now depending on what pairs it is. But yeah, you'll find this a lot faster than a 1-to-1 ratio or a 3-to-1 ratio and so on. 2-to-1 ratios are more common in the markets, so therefore try to take advantage the most you can from these 2-to-1 ratios. Okay, so this right here would be a 2-to-1 ratio. An example, you're losing half of what you're winning, so therefore that is a 2-to-1 ratio. So now going a little bit in topic with a 3-to-1 ratio and above, okay, it's going to be the same concept. We are seeing the uptrend market. We see uptrend structure. Market comes back down to 38.2, retracement, and keeps on going up. Okay, so when we see this retracement go down to 38.2, we can actually take in consideration that we're going to be placing some buy opportunities in the market due to the fact that came down to the 38.2 Fibonacci level. Okay, came down to 38.2 Fibonacci level. We saw some price action, some really good price action, and after that we decided, okay, you know what, this is going to be a good one. It's a really good spot. It's probably in the support area, or it's probably there's probably no other resistance near it, so therefore we are going to be going long in this position for a really good amount of pips. Okay, so in this area we'd be doing about, let's say we have a 15 pip stop loss, and instead of a 30 we have a 45 pip take profit. Okay, so this right here, a 45 take profit, would be a 2-to-1 a 1-to-3 ratio. Okay, I mean, sorry, a 3-to-1 ratio, and from there and above it just gets better. Okay, so as long as you have a 2-to-1 and above, it's awesome. I love those trades. Now if I do have a 1-to-1, I'll think about it. I will take it, but I'll be more conservative on taking it due to the fact that I am risking the same amount I'm winning, and I don't really like that. We always want to be one step above from the market, so therefore try to look for those 2-to-1s and those 3-to-1s and above, so you can actually take advantage of them. Now that we do know the ratios and what exactly we're looking for in the market, what kind of trades we're looking for, I kind of want to go a little bit more in detail with the risk management. It's not that I want to go in detail with the risk management. I want to teach you guys exactly what it is that you should be trading, what lot sizes you should be putting on your trades, depending on your account size. Okay, now a lot of people probably go on that, oh, you know what, if it's a 0.10 we're risking $1, if it's a one lot we're risking $10, and so on. Yes, it is similar, but you also want to go more in deep. You want to go more in detail what exact lot size is considered to go for this specific trade. Why am I putting this lot size and so on? So therefore, I do want to teach you guys exactly how it is that I do this. It's very easy, very simple, and it's very fast and effective to actually start doing it. It's going to take you less than a minute to actually do it on your phone and determine the proper lot size and the proper risk management that you need to use for your trades. So therefore, I'm explaining this on the next video. Okay, so I'll see you guys in the next video. Bye.